My name is Adam B. Levine. I'm a writer and speaker who likes to talk about complicated topics in understandable terms. I'm very excited to be joined, as always, by the other host of Let's Talk Bitcoin. Andreas M. Antonopoulos is an expert in distributed systems and decentralized networks.
Hi, everyone.
Dr. Stephanie Murphy is a scientist and syndicated radio host.
Hello.
So we're going to start off this episode with some listener mail. And Stephanie, would you like to take it away?
I got an email from somebody asking about East Coast Bitcoin events. The person said, oh, it's great that there was this conference. It sounded really exciting that was out in San Jose, but are there any events coming up on the East Coast? And I thought that was a perfect opportunity to talk about what we're going to be doing, at least you and I, Adam, at the end of July.
We've been so excited with the response that this show has gotten. It's been really great. We're still very new to the scene. This is, I believe, we're in our 6th week of production, but we've already been invited to co-sponsor several events, and the first one of those is going to be July 30th in New York City. It's an event being put on by Media Bistro, and it's called Inside Bitcoins. It's a one-day event. There's a good lineup of speakers, and actually, I at least, and we're talking about having Stephanie speak there as well, will be speaking at this event.
What are you speaking about, Adam?
Well, I'm speaking about media monetization again, and at Bitcoin 2013, I gave a talk called YouTube is Broken, Rethinking Content Monetization with Bitcoin, and actually what this talk is going to be about is how advertising in general is broken and how we can fix it with Bitcoin. And I'm really, really excited because I feel like since I gave that last talk, we've had some pretty substantial breakthroughs in this space, and it's still very much under development. There's a lot of infrastructure that needs to be built in order to support it, but just from moving this thing forward and trying to provide a killer app for Bitcoin, I think this could be really powerful, and I'm super duper excited about that. And we're really hoping, the goal is to be able to give this talk on the 30th in July at the Media Bistro event, and then to correspond that with the release of a white paper that open sources the idea. Hopefully we'll have our first implementation ready to go, but these things take time. So I'm less attached to that.
I think it's really funny that your previous talk from the Bitcoin 2013 conference about how YouTube is broken is on YouTube.
Yeah. It's really interesting to note, actually, that the videos of those talks, some of them have QR codes on them. And I just checked the QR code the other day, and the person that did the videotape and uploaded them has actually earned almost 4 Bitcoin so far from a couple of those videos. That's money that otherwise would have gone nowhere. And it was money that wasn't required. Anybody who wants to watch these videos of these talks can watch it, and they don't have to do anything. But if you really enjoy it or you feel like you're getting value from it, it's really easy to put that value back in and give it to the person. And so they're more likely to to say, hey, this was good. We had a good experience, we had fun, and we were compensated a little bit for our time, pay our travel expenses a little bit. And yeah, no, I think it's nothing but good.
I think it's brilliant because YouTube has its own monetization scheme. The problem is their monetization scheme is not granular enough. So yes, the YouTube is broken video is on YouTube, but it's monetizing through Bitcoin, not through YouTube's monetization scheme, because that one's broken.
So I'm for sure speaking. That's a talk that I'm definitely giving at this event. Stephanie's going to be there reporting, and she might be on a panel, or I might be on the panel. We're still figuring out the details of that, but we'll have more to talk about later. This will be something we talk about periodically.
Or we'll just combine into a 3-legged Bitcoin monster and both be on the panel at the same time.
Yeah, exactly.
That one sounds really cool. It's about Bitcoin and free speech.
I'm really jealous, you guys. I would love to be there. Unfortunately, I can't make this particular show, so instead, I'm going to pitch the YouTube video from Bitcoin San Jose 2013. So my speech at Bitcoin conference is now up on YouTube. It's called Bitcoin Neutrality, and you can find it by searching my name and Bitcoin Neutrality. So I did my little pitch, and next time I hope I can join you guys and participate, because I really, really love these events, especially because you get to talk to all of these different people and get so much new information and new ideas and new discussion topics. Usually we're buzzing for weeks after and have so much stuff for the show.
I hope you can join us next time too, Andreas. And I did want to mention that if you're nearby the area but not going to the conference, or if you are going to the conference and want a little extra time with us, we're going to be having a Let's Talk Bitcoin meetup at EVR, which is the Bitcoin bar that's pretty famous in New York City, with Charlie Schrems involved in that. And it's the night before this conference. So that's going to be on July 29th. We've got a meetup event posted on meetup.com under the Let's Talk Bitcoin account.
Yeah, I mean, basically, if you're interested or going to be in New York, you definitely need to visit letstalkbitcoin.com. There are going to be links that'll be readily accessible that'll let you sign up for the conference or sign up for the meetups. And if you are going to sign up for the conference, we really encourage you to take a short listener survey that we've put together. At the end of the survey, you actually get a 20% discount code to the conference, which to my knowledge is the only 20% code out there. There are some 15% codes floating around, but because we're speaking, we got the special one. And also, I mean, even if you're not going, we'd really appreciate if you'd fill out the listener feedback survey. I've been, trying to learn something about our listeners, and it's been really, really cool because, again, it seems to prove out the thesis that the people who are involved with this technology right now or who are interested in this technology right now are really ahead of the curve, and it's cool to see. So you can visit letstalkbitcoin.com and you'll find links to all of these things and more. And there's a banner at the top of the page that you can click through that'll, again, associate with our account and help us out there, because we're trying to figure out how large our audience is. It's sort of difficult sometimes. So now, in addition to the event in New York on July 30th, we're also going to be at an event in Atlanta on the 5th.
Sorry, the 5th of what?
I'm sorry, the 5th, on the 5th of October.
Well, I don't know if we're going to be there yet, but we're definitely following that and making plans for it. And I also got invited to speak at a Bitcoin conference that's being planned in Boston for early September. Although, they don't have formal dates announced yet, they are planning to do something, and some of the guys from MIT are involved in organizing that, so we'll keep you posted as things develop.
If you have an event that you're working on or that you're aware of that you think we should be involved with or aware of, either as a media partner, speakers, whatever, we really, really like these events. Bitcoin 2013 was an incredible experience, and I think that we're all looking to repeat that really as often as is feasible for us. So, again, mail at letstalkbitcoin.com gets us, and we'd love to hear about it.
Keep in mind, this is all about a grassroots currency with a grassroots audience. So one of the things I've been really excited about is meetups. Yesterday, I was invited to a panel at the Financial Technology Meetup here in San Francisco, and it had about 150 people in the meetup, which was pretty amazing, all of whom had no idea what Bitcoin was and were mostly from financial services. And I learned so much just from the questions and the interactions, got a lot of context, got a lot of business cards, and I think also got the chance to really evangelize and educate people about Bitcoin and bust some of the myths. So, even if you're not organizing a massive show, but you just have a meetup and you want to find out how to get involved with Let's Talk Bitcoin, drop us a line.
With conventional Bitcoin exchanges under pressure, we've seen in-person so-called buttonwood exchanges emerge. First in New York City, the ideal of an in-person exchange is powerful and infectious. On Wednesday, the 12th of June, LTB listener Ryan Gold attended the first Los Angeles Buttonwood. He recorded some of the happenings in a brief interview with the organizer of the local event. If you'd like to do something similar, I'd love to discuss it. Email me at adam@letstalkbitcoin.com.
Anyone selling 3 at 108? 3 at 108.
I think you gotta stand up tall and then just...
Yeah, do those hand signals.
We have a buy order from New York.
Anyone selling 3 at 108? We have an order from New York.
No one's selling, everyone's chatting.
No one's selling.
Do we got some more to log here?
Okay, sending.
All right, what about $20 worth for the sake of the first transcontinental trade?
Did you say 140?
$20 worth.
Yeah, so he was doing...
Transcontinental, you mean like...
Just wants to make history here.
Between the two, 0.185. And that was Kirill and WebJoe. So Kirill is the buyer, K-I-R-I-L-L.
Nice.
And what was the price?
He had an ask for 112.
Okay.
And I fulfilled his ask.
Oh, okay.
Yeah.
There are people who could bid and fulfill a bid, and some people fulfill an ask. Yeah, that's right.
Anyone here have Chase Bank?
I do.
Anyone?
I run Spelunkin with Craig and David Moon. So this event is actually started by a guy named Josh in New York, and they do Satoshi Square, and they've been doing it maybe 3 or 4 times already, and it just seemed like a lot of fun. And we were kind of jealous that New York had all these meetups and exchange events, and it was just really exciting to see the app get developed and people coming together to trade coins in person. It was a safe location, didn't feel shady, and we decided to do one here. I think we had more people, like way more people selling than buying, and I would say maybe half or a third of the people here had never bought a Bitcoin before and just were curious about it and want to learn more about it. Whereas the difference between this event and the one that we were at last week, the LA Bitcoin group, is that this was more public and accessible, whereas the other one felt like you had to be into Bitcoins already, and maybe was a little bit more intimidating to people that didn't know anything about it, whereas we were really pushing the newbie-friendly aspect of it. I liked seeing that people are into Bitcoins for lots of different reasons. Yeah, I was basically telling people that it felt like when e-commerce and the web were starting back in, the early 90s, that kind of feel is the same sort of feel that Bitcoin has to me. It is interesting to see all the different ways that people store their Bitcoins and the different ways that people are choosing to send them to each other. Because it is such an awkwardly long chain of numbers that if you don't do it as a QR code, I've seen people using email addresses. And yeah, for the Bitcoin I sold today, it was with the blockchain app. That worked out easier than I thought it would too. I think the event was really successful and a lot of people came out to something that really is still obscure. Like not a lot of people know what Bitcoins are yet. So to see this many people willing to come and, bring cash out to a public location, to a park. This park is new. Nobody even knows it really exists. So all those factors kind of played against us, and despite that we had 35 people. So I think we did pretty good.
I really appreciate Ryan doing that. We don't have anybody located in Los Angeles, so he contacted me about a week ago and was like, hey, I think I'm going to be at this event. Is there anything that I can do? And I was like, yeah, if you could record something there, that'd be fantastic. And so this is perfect. It feels like we just get this little chunk of history, and it was great to hear this first Los Angeles to New York transaction happen. I really feel like that's
transcontinental.
yeah, there you go. It's a powerful thing, I think. And 35 people there, man, that's not that many when you think about the number of people. But then as someone who, Andreas, we had our first Napa Valley Bitcoin meeting, and it was you, me, and my wife, and a friend that you brought, and that was it. And it was great. That was still good.
It was fantastic. I enjoy every meetup opportunity, but the buzz in that audio clip was just palpable. We keep talking about regulation of exchanges and the dangers of over-regulating exchanges and shutting them down. Yeah, good luck. Shut down a Buttonwood. See how you can do that. This could pop up virally in thousands of locations in hundreds of countries. There really is no stopping individuals from trading face-to-face. I think that is always the relief valve for Bitcoin. If all else goes poorly or gets regulated or co-opted or messed with by authorities, at the end of the day, if there's supply and demand, two people can meet up in a park and trade Bitcoin, and that's all you need to have a sustainable economy. A smaller one, a slower one perhaps, but still a sustainable one. It would be nice if we could talk a bit about the need for ease of use and software that addresses the real-time face-to-face trading scenario, ad hoc, unplanned. I just met you, let's trade.
Hey, I just met you. This is crazy. Here's my Bitcoins.
So how do you solve that problem, Andreas? I mean, are there any software solutions out there, or are we just, is this just something where someone needs to develop a solution that makes it easier to do these kind of person-to-person transactions without having to wait around for confirmations?
I think the big issue wasn't the confirmations. What we heard from our Los Angeles correspondent was that one of the big challenges is a 37-character address is damn hard to convey verbally without making a mistake and being able to verify it. And if you don't verify it correctly and you just send money off into the ether and it disappears, whoops. That could be a pretty serious problem. So I think easier ways for doing face-to-face and in-person transactions that are not pre-planned, essentially a trading platform for in-person trading would be a fantastic application. We have localbitcoins.com, which is a great solution for planning and executing a two-person trade, but we really don't have the kind of trading pit application where, let's say, for example, you had a system for people to set up a mesh Wi-Fi network in the vicinity and put orders on an order book and match bid and ask electronically while shouting in the pit. That would be fantastic if you could do settlements. So, you know, a few people with iPads, a few people with Android phones, and a few people with iPhones, essentially building an ad hoc trading pit right there and being able to do settlement.
On the address problem, I mean, I was talking with a listener the other day about, he was talking about putting his Bitcoin address on like a t-shirt that he was going to wear somewhere. And I was like, well, what if you put a QR code on it that had your Bitcoin address in it? I mean, like, what if that became the thing, you know, where like you had like a badge or something that's got your QR code for your public address. And, you know, whenever you do a trade with someone, essentially all they have to do is snap a picture of your badge. Or are you looking for something that's more granular where like every transaction has its own address and therefore something like that is too permanent?
Well, I mean, I think part of the problem with that model is that it requires everybody to prepare and print and have badges or t-shirts or whatever. Whereas if you had a software solution, everybody could just show up, download the app, and boom, they're off running. And also, if you heard in the background, you had that transcontinental transaction. So how do you communicate the fact that somebody in New York wants to buy something that's in Los Angeles? Should be able to transfer that information more conveniently than having to exchange email addresses. Some kind of IRC backend where you can communicate essentially these addresses across the wire. I don't know, I'm just speculating here, but where there is a need, there's an opportunity for smart developers to build an app that enables this kind of buttonwood trading.
Another thing about that, of course, is that this is a really nascent market right now. This was the first event that happened in Los Angeles, and as they said, there have been 3 or 4 that have happened in New York to this point. Do you think that this is something that we're going to see replicated, you know, into every city, or do you think it'll be major cities? Or, I mean, how pervasive do you think something like this could get?
I would hope it gets very pervasive because this is the alternative approach to exchanges. And exchanges as means of centralization have a lot of really big weaknesses. But again, I think this is more of a model for, you know, the other 6.5 billion. Well, what do you do about trading Bitcoin in countries that don't have exchanges? What do you do about trading Bitcoin with people who don't have bank accounts? So I think this model has even more applicability and is much more enticing to people when they don't have the infrastructure to trade Bitcoin. It's already hard enough here, but in many other countries, it's near impossible. Yeah, I think that would be a great way of combining essentially local Bitcoins with meetups.
I was going to say local Bitcoins is actually my favorite way to buy and sell Bitcoins, and I think the popularity of local Bitcoins, at least here in the US, shows that there is really a demand for decentralized exchange mechanisms. I also think there's a social aspect to it too, as I've said before on the show, where you end up meeting people and making connections which are more valuable than just maybe selling or buying Bitcoin. You know, often they're people who have common interests. They may become friends or business partners. And so I just really like that model.
Further to this point of listeners do stuff, everybody's got a project. This is one of those things where if you live in a place where there are people who might be interested in this, but it doesn't exist yet, you know, I mean, there's not even one of these in San Francisco yet. I know there are a couple of people talking about starting one, but to my knowledge, it hasn't happened yet. I don't know if there's a date set. So, you know, if you're looking to start something like this, give us a call at 1-855-WE-TALK-BITCOIN. Or email us at mail@letstalkbitcoin.com. We'd really love to hear about it. And again, what I'm actually thinking I'm going to do is pull on like the principal from the New York event, the principal from the Los Angeles event, and maybe 1 or 2 other places if somebody makes themselves known, and kind of do a group interview with everybody and kind of see how the experience has been from the perspective of, you know, people who have been doing this for a while and what guidance they can offer to people who are just getting started.
Yeah, this is about making Bitcoin trading robust, sustainable, and very difficult to ban or regulate out of existence. And that matters even more in countries that are oppressive or have oppressive legal systems. So yeah, absolutely. Start the trend, build it here when it's easy, and then help spread it as a practice. You know, it's not just about technology, it's about cultural norms, it's about process, it's about habits. All of these things can be gradually developed and refined so that they become widespread and consistent.
If I showed you a website where you could easily purchase electronics from the world's largest distributor with Bitcoins at 0% markup, would you think it was too good to be true? Good news, it's real, and it's at bitcoinstore.com. Choose from 500,000 items, save money over Amazon and Newegg, and convert your Bitcoins to real-world items. You can even buy with privacy. All they need is a shipping address. But don't take my word for it. See for yourself at bitcoinstore.com.
Let's Talk Bitcoin is heard each week by thousands of people who are participating in the new digital economy. Our listener base of Bitcoin owners, miners, investors, technologists, and merchants is growing fast. We offer a limited number of short advertising slots in each show to keep our listeners engaged and to provide maximum impact for our sponsors. If you'd like to talk to us about Let's Talk Bitcoin, send us an email at sponsors@letstalkbitcoin.com. So this topic is not specifically related to Bitcoin, but it kind of talks about the larger financial picture and situation that we find ourselves in. And so I feel like it's worthwhile to have a discussion about this. For the last 5 years, 6 years, the global economy has been in kind of a financial crisis, a banking crisis, caused by a lot of debt in the system that doesn't really have a good way out. So we won't get too much into that. The point is that consistently there have been a lot of bank failures. And up until recently, the way that those were taken care of, if they're important enough to save, which means large enough that they feel like it would be detrimental to the economy or whatever the reason is, then the process has been to take taxpayer money from the country that the bank exists in and to essentially use that to even out the imbalances in the balance sheet. Without that evening out, the bank would go out of business, which would then cause the government to have to cover the losses because they provide deposit insurance, but they don't actually have the money to pay for the deposit insurance should it come to that. That's been the problem up until this point. What we were talking about before is called a bailout. What happened with Cyprus is called a bail-in, where instead of the government coming in and covering the difference in the balance sheets with taxpayer funds, instead what they did is they took depositor funds. People who had trusted the bank and decided to keep their money with the bank had a certain percentage confiscated or transferred, whatever you want to call it, to cover the holes in the bank's balance sheet. This was a really disruptive thing because it had never been done before. It was something that was very contrary to everyone's expectation, and so to prevent people from pulling their money out of the system wholesale, they essentially had to put capital controls on, make it very difficult to pull out money, and make it very difficult to leave the country with that money. Now, what's happened since Cyprus is that other countries have started looking at that bail-in model, and they're saying to themselves, oh, well, this could solve our problem because now if a bank goes bad, it's not on us. It's a bad thing because it's, would be better if the banks just were able to stand on their own. But also, if you announce it in advance and you make it the standard policy, I think it might actually be a good thing because it's all kind of about expectations, right? It was so disruptive in Cyprus because nobody expected it. Everybody felt like they had deposit insurance, and so they didn't need to be concerned about what the bank was doing. But in the case of New Zealand is an interesting example of this. They've been talking about making this an institutionalized practice, where if your bank goes out of business,
Wow.
well, no, wait for it though. If your bank goes out of business, then they take a certain amount of money from you, whatever is required, in order to cover the holes so that the bank keeps going. With the thought being that if the bank went out of business, if it wasn't going to be rescued and it went out of business, you'd lose a lot more money, and you'd have to go through a process to recover it because it would essentially be bankruptcy, and then division of the assets that are left over, and so you'd get back whatever percentage relative, but it would probably be worse than if you just paid for it. So now, here's the interesting part. By making it a policy, doesn't that mean that everybody who keeps their money in an unsafe bank is going to be really concerned and move their money to a bank that they consider safe?
A lot of people investing in mattresses to store their money under in that case. I mean, everybody likes to know what's going to happen. They want certainty about the future and some level of security. And as you noted, Adam, that was what was really terrible about Cyprus. It came out of the blue and people were blindsided by it, caused a lot of instability. But having this as a policy, I think people will really start looking for alternatives. And maybe one of those alternatives is Bitcoin, because you can't, frankly, do this with Bitcoin.
So I look at this and I think, well, who hasn't been touched by this? Essentially, you've given us two options, or if you like, the world's bankers have given us two options. Bail out, screw the taxpayer. Bail in, screw the depositor. Hey, what about investors? What about bankers? When did they get screwed? When did they lose their investment? This is the massive perversion of capitalism. The whole concept behind capitalism is that you take risks, and if those risks don't work out, you lose your investment. If you don't lose your investment, essentially what we're doing is privatizing the profits and socializing the risks. So the bonuses keep flowing, whenever the bank goes well, and whenever it doesn't go well, well, screw the taxpayer or screw the depositor. That's a great model because essentially it means you can't lose by being in banking, and the result of that model is that banking is the only sustainable industry because no one wants to invest money in anything else because everything else carries risk. So I have a third practice. Instead of bail in and bail out, I like the Icelandic practice, which I call jail in. Take the bankers and jail them. Take the investors and fleece them. Drop all of their holdings. Take away all of their investments from the bank investments they've done and make them suffer a 100% loss. And then let capitalism work it out. Because then investing in crappy banks becomes a risk. And when banks go out and invest in bad loans and don't do due diligence, they screw their shareholders, not the taxpayer, not the citizen, not the depositor. So jail-ins, thank you, not bail-ins, not bailouts. All of this is a massive distraction to ensure that the one person or the one group of people who never get touched by any of this are the investors and bankers themselves. Let the bonuses flow and screw the taxpayer. Well, I don't think that's the right answer.
Don't you think these people, bank executives and so forth, are protected from personal liability if they screw up something and don't run their business well by the government, though?
Of course they are, because they get to write the law. I mean, this is not just a matter of, whoops, we made some mistakes and lost some money. This is a matter of widespread, consistent fraud, front-running trades, doing these predatory loans with full knowledge that they are crap loans and then trying to sell them to other counterparties as good loans, fudging the numbers, fudging the audits, fudging all of the regulatory protections, pricing things at levels that have nothing to do with anything, co-opting all of the rating agencies in order to ensure that there's a little back channel payment for every rating. All of these things, the corruption of IPOs, the corruption of Libor, this is outright theft. It's fraud. And the only reason these people haven't gone to jail is because they own the law. Otherwise, please, can you find evidence of all of this fraud? Sure you can. Start rolling the little people in the banks. Get them to rat on the bigger people on the banks for plea deals. Stick wiretaps on all of them. And within a month, you'd have a wonderful RICO. Racketeering and corrupt organizations is what RICO means. You'd have a wonderful RICO prosecution and you take them down. The problem is, prosecuting bankers is hard, it takes time, and it takes a lot of political capital because they own the campaign spending of all the politicians. So, you know, at the end of the day, this is all bull. This isn't lawful, this isn't capitalism, this is a corrupt kleptocracy. This is a mobster action at the highest level of the entire world's financial system, and they get away with it again and again and again. And all that does is reinforce that corruption, reinforce that theft, and it basically means that the entire banking system is a pit.
I'm not disagreeing with anything you said there, Andreas, but at the same time, I think that expecting the system to change in the way that you're saying it should is not likely to happen.
Oh, of course not. Yeah, I mean, you need extreme action to change these entrenched powers, for sure.
So that's kind of what I'm saying here, is that compared to what we're doing now, right, compared to the bailout practices where a government just gives them the money and it comes out of the taxpayer's pocket, isn't it better to instead make it so that the loss affects a smaller number of people in a more significant way while giving them the knowledge and ability to withdraw themselves from the unsafe situation? I mean, like, that's the thing where, you know, again, Cyprus is different than New Zealand because in Cyprus it was a surprise. But if New Zealand makes this policy, then, I mean, as someone who has money in a bank account, if I felt like my money was not as safe in one bank as another because this bank that I'm with takes more risks and has riskier practices or whatever else, then I'm really greatly incentivized, if I know that if they fail, it comes out of my end, to take my money and to put it into some place that I'm sure is absolutely safe. I mean, Stephanie, I think you kind of said it there with the mattress analogy, you know, and people just putting money in the mattress. But at the same time, doesn't this mean that there's value to being a bank that isn't taking risks, to being a bank that does do it right?
Yeah, but how would people know that? I mean, it's really difficult for people to vet their banks. I mean, maybe that is a solution, but personally, I would feel more secure in a situation like that, taking my money and putting it under the mattress if I could.
Well, there's never been a reason. I mean, that's the thing, is that when you have a market like we do now for banking, where every bank is functionally the same because if any bank fails, then you're supposedly covered by insurance, there is no reason to have any difference between banks, and there's no reason to have any apparatus to tell the difference between banks, because it's just about, well, what kind of reward card are they going to give me versus the other guy? But if this was the policy, if deposit insurance was not a thing, and instead you just had this expectation, then I think that, yeah, I mean, certainly I'd be looking at that and going, man, there's a newsletter. Let's dig into bank financials and see who's taking stupid risks and who's not.
Yeah, the problem is right now all of them are taking stupid risks.
Well, yeah.
Depositor funds and consumer credit and small business credit are no longer profitable enterprises. And the reason they're not profitable enterprises is because this perversion of the financial system has driven all of the profits into financial securitization. Find a flow of money, stick a straw in it, and start sucking. That is the only profitable financial activity right now, and as a result, it's pushed out all other investments, and all of the money is flowing in the trillions and dozens of trillions into these derivative instruments, because basic innovation, credit, the things that make an economy run are no longer relevant. And they're not relevant because you can run an economy that is entirely an elitist economy just for the 1%, that basically sucks everything out of the taxpayer, sucks everything out of the depositor, and funnels it up the ladder. You know, I don't want to give up on the idea that we should have rule of law, that contracts should be enforceable, and that losses should be suffered by the investors. Because if you give up on that idea, then essentially you've got a house of mirrors. It's really a protection racket. It's nothing more.
So we talked on episode 4 of Let's Talk Bitcoin about the promise that Butterfly Labs, which is a company that makes Bitcoin mining hardware, had made to donate 1,000 Bitcoins to charity if they didn't make their power specifications on the items that they had sold on pre-order. We had said that they had not done it, to our knowledge, had not made that donation. Well, it looks like apparently they did at this point. Now, whether that's because they're listening to Let's Talk Bitcoin and they felt the pressure, or because they were going to do it anyway, I'm not exactly sure. But there's a new organization out now called the Bitcoin Development Fund. And currently they've got 708 Bitcoins. That's because they had 1,000. It was from Butterfly Labs. And they funded several projects already, which are either charitable organizations that use Bitcoin or open source projects that provide value to the Bitcoin community. So far, some projects that they have funded are Sean's Outpost, which I talked to Jason King from Sean's Outpost at the Bitcoin conference. It's a homeless advocacy organization. He's also involved in Food Not Bombs in Pensacola, Florida. And he says 1 Bitcoin will feed 40 homeless people. So they gave him 75 Bitcoins, which is great to see. They've also funded the Electronic Frontier Foundation, funded a couple of open source projects, the Free Software Foundation, Open Source Ecology, CG Miner, and BFG Miner. The latter two are open source Bitcoin mining software projects. They've got a bunch of other projects for funding on the docket. I think this is pretty cool. They followed through on their promise. You know, some people are mad at Butterfly Labs and say, oh, this is the least they could do. Some people are also criticizing it. I saw a post on Reddit saying, oh, well, you know, they're funding Bitcoin mining software projects, and so this isn't really charity, it's actually to benefit them. But I don't know, I see some charities and charitable educational organizations on there. I think it's pretty cool. You can apply to be on their board that decides who gets the funding if you email them through their website, which is bitcoindf.org.
I think it's great. I think that this is an example of a company really stepping up and doing the right thing. You know, there was a big question about whether or not they were going to pay this out, because at the time that they promised it, it was worth somewhere in the range of about 5% what it cost them now. And their story all along has been that they can't refund Bitcoins because they simply aren't keeping them in Bitcoin form. Instead, what they're doing is they're converting them into US dollars or some other local currency so that they can be used to essentially do the manufacturing. So this was no small cost to them to do it. So I have to definitely commend them for doing the right thing and, you know, deciding that it was better to follow through than to try to beg out by saying that the value was too high. Because honestly, I didn't know what to expect on this case. I think that the way that they've set it up as a fund where people can apply, I think that's great. That, you know, this is an example of good action. I have to say, I have nothing bad to say about it at all.
There's also some more news about Butterfly Labs. Apparently, and this is kind of breaking news. Breaking news, Butterfly Labs has actually shipped. Apparently, earlier this week, and recording this on June 13th, so just a couple days ago on June 11th, they apparently shipped their first single SC 60 gigahash per second Bitcoin miner. They posted about that online. Some very lucky person is going to receive it. You know, there's a lot of excitement about this. People have been waiting for, at this point, almost a year to get some of the units that they had sold on pre-order, that Butterfly Labs had sold on pre-order. And people were getting really antsy and anxious and angry. A lot of people got refunds. I know, Adam, you got a refund. You did a pre-order in Bitcoins and got a refund when Butterfly Labs did not ship in a timely manner as you thought they might.
Yep.
A lot of people are angry at them, but maybe they're starting to actually deliver on what they sold.
Well, it's a great start. I mean, you got one down, 35,000 to go. I think they're off to a one. I have no idea how many pre-orders there are, but the
journey of 1,000 miles starts with one butterfly,
exactly,
one jalapeno.
But there were a lot of pre-orders. So, you know, I mean, again, now that they've got all these pre-orders that are all stacked up with people who have put money in earlier in the process, and now they're going to kind of be getting it over a relatively shorter period of time than they've been waiting. What's the network going to do? What's this going to do to miners? Is this the end of GPU mining for Bitcoin? Or, I mean, what do you guys think?
Will they all shift to Litecoin, and then the Litecoin difficulty will also go up? Yeah, I think absolutely that will inevitably happen, but it's not going to happen until it happens, so we have to remember that. I mean, people have been saying for months, it's not over till the fat lady sings, right? That classic expression. It's not over till Butterfly Labs and maybe other players ship in large quantities. And even then, it's not really over. It's just changed. You know, it's a change in Bitcoin mining. And also, as GPU miners drop out in mass, perhaps the difficulty will go down a little bit, so maybe there'll be a balancing effect. I'm really not exactly sure what's going to happen, but every day counts, and if you're mining, you can still operate pretty much the same way you have been for the last couple weeks or months.
I don't believe that any of us are mining Bitcoins. Stephanie, are you still mining Litecoins?
Yeah, I've been mining Litecoins.
Okay, so I don't mine anything. I don't think Andreas mines anything. Stephanie mines Litecoins, but not Bitcoins. If you're someone who's mining Bitcoins and you have an opinion about this, again, great way to reach us, 1-855-WE-TALK-BITCOIN. We're actively looking for people who have actually some experience hands-on in the mining space who can give us some more educated perspective than we're able to provide with our speculation.
I live in California. The cost of electricity here is prohibitive.
Not competitive, yeah.
Yeah.
Somebody needs to make a solar Bitcoin ASIC miner. Like, hook it up to a big solar panel.
Well, if the price of electricity is not competitive, I can tell you the price of real estate to actually put up solar panels is way not competitive.
That's why you got to carry it around on your back. Wear it like a sandwich board.
Also, I live in the fog zone, so no sunlight.
Damn, I guess you're out of luck. Yep. Well, I mean, it is really interesting because we have seen so many companies offering ASIC miners for pre-order. The people who have been around and have seen this developing are incredibly skeptical, which I don't blame them for. Even some of the miners that looked really promising that we've covered on Let's Talk Bitcoin before, I haven't seen much about them lately. Like we talked about that little USB ASIC miner. We talked about the Jupiter and the Mars that were offered for like some $20,000 or something on pre-order. None of them really come to fruition yet. Avalon is still the only company that has really gotten their first round of ASIC miners out there, and I don't even think they've gotten the second and third rounds out yet either. So it's still very much up in the air, and like we said before, it's not over until those things are delivered and it has whatever impact on the network it has. And then there could be some other disruptive technologies that could change things even further. So there's a lot of uncertainty, a lot of risk, but also a lot of excitement. It is totally like the gold rush.
Everyone knows that offline storage is the only safe way to store your Bitcoins. Now there's an easy, convenient, and secure way to make Bitcoin wallets for safe offline storage. With the Safe Paper Wallet Kit, you get everything you need to print Bitcoin wallets using your own PC. Store them in a safe deposit box, your home safe, or even your sock drawer. Anything's more secure than keeping them online. Get your kit now at safepaperwallet.com.
You're listening to Let's Talk Bitcoin, the premier audiocast providing news and insights that cover the rapidly evolving world of digital money. Our twice-weekly shows include analysis of late-breaking news, updates on key technical, business, and regulatory issues, and in-depth interviews with the key people driving the new digital economy. Let's Talk Bitcoin offers sponsors an attractive way to reach a targeted and savvy audience. For more information, email sponsors@letstalkbitcoin.com.
We recently spoke with both the creator of Litecoin and the creator of Feathercoin. And there are lots and lots of other coins out there, with more coming out nearly every week. One of the big things that in my mind, and I'm curious what everybody else thinks, differentiates a good potential chain from a bad potential chain is whether or not they were pre-mined, right? And so I brought this up with Peter, the lead developer of Feathercoin, and he explained to me that people think of pre-mining as a larger thing than it actually is, because the way that he defined pre-mining, he said the technical definition of pre-mining is that the first blocks are mined before the currency is publicly available. And so long as you don't start mining before the currency is publicly available and announced and people can start mining with you or against you, then it's not a pre-mining. And so what I was wondering is, what do you guys consider pre-mining? And do you think that there are any circumstances where it's not a net negative for the currency that is being pre-mined and where it is actually a beneficial thing that helps?
I could see how it could be kind of a gray area as to what's publicly available. You know, is beta public? You know, is anyone free to sort of participate or to download the code or the software? There is an incentive not to pre-mine, which is that you want a large and robust network, right? So it's not vulnerable to 51% attack. And so you want as many people jumping on the network as possible. So although I guess if you keep it secret among maybe like a group of developers, how would anybody know to attack your network? Of course, there is this sort of pump and dump idea that's a incentive to pre-mine, which is like, you know, you pre-mine a bunch of coins, you somehow get them on an exchange, and then once the value goes up, you dump all your coins and then kind of like abandon the project. I think there are kind of incentives in both directions. Is it okay? I don't think there's anything immoral about it. I mean, it's kind of a crappy thing to do, seems like. You know, you don't know if those coins are going to have any value anyway, so sort of anything could happen, and people might not like that you have pre-mined after the coin comes out and starts getting acceptance. You know, you might get some backlash and sort of boos and hisses from the crowd, in which case the coin may not be worth anything. When I interviewed Charlie Lee, he said that he believes that the success of Litecoin was actually in large part due to the fact that there was no pre-mining. And he had that as a specific principle that he had in mind when he put Litecoin out there, that there was going to be no pre-mining. He saw already that there were several coins that had failed, and he thought it was basically because of that. I don't know, while pre-mining might be tempting, perhaps in the long term, it would be in the best interest of the coin and of the developers to stay away from it.
I think people should be skeptical and apply caveat emptor, buyer beware. When you see a coin that is recently released, check out and find out how much of it has been pre-mined. You can see the blockchain and see exactly what's going on. I like to paraphrase Douglas Adams when people say, you know, it was publicly released, so it's not really pre-mining. So, oh, it was released, really? Yes, it was released. I had to go down into the cellar to find the release software. Well, yeah, that's the software release department with a flashlight. Oh, well, the lights had probably gone. So had the stairs. Hey, but look, you found the software. Yes, it was in display at the bottom of a locked filing cabinet stuck in a disused lavatory with a sign on the door that said, "Beware of the leopard."
Oh, I love that quote.
Hitchhiker's Guide to the Galaxy. And, you know, so the concept of publicly available software is a slippery one, right? So
Yeah, right, exactly. If it's publicly available, but you don't tell anybody, then it's a little bit questionable. Yeah, Stephanie, I think you're totally right. It's a trust issue more than anything else. Beyond that, I guess, if there was only one cryptocurrency available, then maybe it would be fine. But since there are new cryptocurrencies coming out, it's almost like it's a competitive disadvantage. And so that's kind of the position that I've wound up finding myself on, is that it's not so much a moral issue as it is, if you truly want your currency to succeed, then you want to give it the best potential to succeed. And in order to give it the best potential to succeed, there can't be this appearance that you're in it for the short term or that you're in it to get rich. You have to be in it because it's legitimately a better idea that fixes a problem. And if you need to pre-mine in order to accomplish that, then maybe that's not what your goal is. You know, the reasons why people usually tell us that they pre-mine is because the development team needs to be compensated, right? The development team needs an incentive to carry forward developing this coin, because if they're just, you know, if miners come in and they get all the reward, then there's no reason for the developers to keep going. And so, I mean, do you guys think that that's true? How do you think that the developers of new cryptocurrencies should be compensated, if at all?
Well, they'll be compensated because they knew about it first. Even if there was no pre-mining, they still have the opportunity to get in and mine super early in the lifetime of that currency. And if they really steward it well, if they really promote it, if they develop resources for it, and if it's a good idea, they will be compensated in the long term because the popularity of that thing is going to increase. I mean, I'm sure Charlie Lee is doing great on Litecoins, even though he didn't pre-mine them, because they've been a long-term investment of time and energy.
It depends on what the coin is and how it's being developed. So I'm very skeptical of this idea that developers need to be rewarded, and the only way to do that is to pre-mine the coin. I mean, really, come on. First of all, this entire system is based on open source software, and a lot of people can benefit very nicely from mining early, not pre-mining. And at the end of the day, if your contribution to this amazing software edifice is that you went in and did search and replaced Bitcoin with Andrea's coin, and then changed two parameters and recompiled, well, yeah, you should be lavished with reward for your amazing contributions. People have been slaving away on this software for years and have contributed incredible amounts of quality code for nothing. So please, spare me the sob story about unrewarded developers. This is a community. Put up.
The final part here is that beyond the technical pre-mine, a lot of times what I've been seeing, because I've been really trying to dig into some of these altcoins and figure out which ones are real and which ones aren't. And one of the things I've noticed is that a lot of coins are really now wary of the idea of being labeled as a pre-mine coin, because it makes it so that people are less likely to pay any attention to them. So what they do instead is they change the block reward, right? So that like the difficulty is really, really, really low at the very beginning. And the reward per block is a multiple of what the reward per block will be, you know, after a week. And so they essentially, you know, they release it publicly and then immediately start mining. And because the difficulty is so low and because the rewards are so great, they still manage to accumulate a large number of these coins with still relatively little effort because of these conditions that they put into the actual code itself. So do we think that that is still functionally pre-mining? If they front load the mining so that it's more rewarding at the very, very, very beginning than it is at any other point?
Yeah, I think people will call that out and say, hey, that doesn't look exactly fair. That's a little bit, you know?
So it's not so much about the technical part. It's about that it looks like they're trying to profit. It looks like they're trying to profit, right?
Yeah, which is why I think what you said earlier, Adam, makes a ton of sense. There has to be the message conveyed that the reason that I'm making Stephanie coin is because I think it adds value to the community and I'm in it for the long term, not because I want to basically get rich quick.
There's a spectrum here. You go from the outright scam coin, the pump coin, greed coin, the icky coin, the slightly slimy coin, slime coin. You know, there's really degrees of sliminess and greed and just outright scamminess out there. This is printing money. So anyone who has no ethical compunction, no morality or whatever else will try to print their own money. This is one of the areas where people need to be extremely vigilant and ask themselves, what is this really adding to the ecosystem of coins? Does it solve an actual problem? What is the attitude of the core developers of this particular coin? Is it enriching the ecosystem and supporting the community? Is it perhaps giving back for the amazing gift they received from Satoshi for nothing? Or is it just their way to make money? And so far, I've seen few coins that really are community developed and giving back to the community, and lots of scam coins, greed coins, and slime coins.
So what about this idea of bounties, right? This is one of the reasons beyond the developer reason that I've been hearing. And actually, Peter from Feathercoin, they didn't pre-mine, but again, he was able to in the first 5 days. I think he said he mined 150,000 coins, something like that. So he then used those as bounties and gave them all away over the course of, I believe it was a month, maybe. It might have been a couple of weeks, as bounties for people to create services. And so on the one hand, I can see that, and I can say, okay, well, that makes a lot of sense to me, because you want other people to be invested, you want other people to be into developing it. But at the same time, doesn't that sort of present a conflict of interest almost by giving away coins that you think are going to be higher value and incentivizing those people to then make them higher value? Or is that just how this adoption has to happen?
Well, that's the IPO component to this. I mean, every coin is an IPO of sorts, and I think there's nothing wrong with the initial inventors of a new coin to make some money off the IPO, as they are the earliest adopters, and take some risks by mining something when they could be using that CPU power to mine an existing coin that's already well established. There's nothing wrong with that. The issue is really a matter of transparency and process. If you upfront tell people how you're going to use the coin, and you do bounties or you invest them back into the currency, that's a whole different consideration. If you just pre-mine all the coins, stick them in your pocket, make a pump and dump scheme, that again is, it's all about how you manage it, both before in terms of disclosure and after in terms of actions.
Like anything, I think it's not really for us three to decide, is it okay? You know, that was sort of the initial question, is pre-mining okay? The community decides if it's okay. I think the answer that's coming out at this point is no, but that's a community decision, and that's something that's kind of up to the market, and that's something that I love about all of these decentralized cryptocurrencies.
Thanks for tuning into episode 16 of Let's Talk Bitcoin. Whether you liked, loved, or hated the show, we want to know what you think. Please send out comments, questions, and offers to help to mail@letstalkbitcoin.com. If you like what we're doing and want to support us with Bitcoin or Litecoin donations, please visit letstalkbitcoin.com for episode-specific addresses. If you've got a question you'd like answered on air, call us at 1-855-WE-TALK-BITCOIN. That's 1-855-WE-TALK-BITCOIN. Thanks to Andreas M. Antonopoulos, Dr. Stephanie Murphy, Ryan Gold, Thomas O'Brien, Michael Megan, Cedric Dahl, Brian Anderson, and Jason King for providing content for this episode. Music for this episode was provided by Jared Rubens. For more information about the music we use and the open source artists who created, please visit letstalkbitcoin.com/music. Stay tuned for episode 17, coming up Tuesday the 18th of June, featuring more discussion and interviews. Thanks for listening.